Thank you, everyone. Thank you, Frederick. So I'm actually very happy about what we announced this morning. And we are looking forward to take you through the highlights of our Q2 and also what we can say about the near future. So first of all, we are back into double-digit organic growth. It's still a modest double-digit organic growth. I believe we can do better. And if you remember what I've been saying the past quarters about that we have an underlying growth of things we want to focus on, but because of the large changes and disruptions globally, there are also things that we have abandoned doing business in. And as you can see and have followed over the past quarters, we have maintained growth. And we believe that once we are finished removing the parts that we don't want to continue doing business on, then we will see higher organic growth. Because at this point in time, I see a lot of market opportunities for Trifork in public in Denmark, in Canada, in Spain, in Switzerland, some of our main markets. But of course, we need to be set up for this, and we need to have the right organization to execute on it. I see a lot, at the same time, a lot of market possibilities for private sector. So I don't want you to overanalyze public/private growth or not, because first of all, Trifork is an organization of people and now also agents. We welcome all our AI agents to the company. But first and foremost, the people we have, we cannot just change them from one day to the next. So if they are in one quarter very focused on public and we see also opportunities on private, then we need to grow that organization, the AI organization and the real people organization, to take advantage of it. It's not like a switch you can push. So that is the intro remarks. What you see here in the first box is that I'm very happy to see that our growth in products is maintaining. We are still at the very beginning of having a substantial product business at Trifork. We have a number of very promising products we have been able to build because of our customers have been willing to co-innovate with us, but also because of AI, that now we can build IP and products faster. But you can only build the right products if you know what those products should do for the world. Also, for the past quarters, we have seen a strong momentum in sovereignty, that Europe, Canada, Australia, other places want to take more control. They see that we cannot just leave all our data in the hypercloud, in the cloud outside our control. But there's also demand for a lot of new data because AI needs data. So we also see a net growth in data globally. And a lot of that new data will be situated in Europe and in our managed service centers. So operation shows good traction, and I believe it will continue to do for the next quarters. Then we have on top of, you can say, the hardware, the infrastructure, we have Corex data, we have Corex AI, but we also have AI in all our products, such as our Trifork Health platforms and other products. So really strong message for our product, but still early days. Then we saw in Q2 a strong pull in public sector, and especially in Denmark. We have a good track record for winning the things we believe we can win. So we also have to be careful not to waste resources because that has a cost effect on P&L. So we choose very carefully what we bid on, and we bid on, and we win a lot of the ones we bid on. And you probably, so Denmark is still a large part of our market. And there were actually a period where we didn't have a government and where there were election and uncertainty and where the government and the agencies couldn't really put out tenders. So I'm even more happy that we actually were able to win business in that quarter that was quite challenged with these things. Now, We also see that we have been able to improve our earnings since last quarter or since second quarter last year. And we believe there is still a good potential. So when we get more scale in products, we also improve margins. And as I said, there are still areas of business that we don't want to be in anymore. And there are still some trailing costs there, but Christian will talk more about that. And I would also see that you shouldn't expect Trifork to be half in size in people just because we have AI. We'd rather grow and accelerate our revenues because you cannot just send an agent to be an AI consultant at one of our customers and helping them to adopt AI. That need to be highly skilled people, architects and business developers and people who really know about technology and business. So, so over the next 1 or 2, 3 years, I still see Trifork grow, but we should grow revenue faster than the amount of people, of course. We have been very thoughtful about capital allocation. So we have committed to our share buyback program that is going at full speed. We cannot deploy more under the rules and regulations that we are in than we do now. So that's also why we have decided to pay out a dividend of 3 Danish kroner per share from the proceeds on the Verdane deal. Okay, let's move on. So, having said all this, here you see in the context of the former years. So, as Christian will go into detail about, I know that some of you are concerned about will we make our guidance for profit and EBITDA this year. But we believe that we are on a good track to do so with the information we have now. And as you can see, it's actually the first time in a long time we have been, you can say, almost ahead in regards to revenue. So there we are underlying ahead if we compare to H1 the past 5 years. And I've been looking at those numbers. And for EBITDA, it looks more normal. But we still believe that there is more to do in regards of profitability for the future. Hence my comments on the earlier slide. Let's move on. So we're still on the bigger picture, our plan on transforming Trifork to become a product-led company. And what we're doing now is to really doubling down on the industries and sectors we are betting on. We believe more than ever that having deep domain knowledge and working very close with our customers, that we co-innovate with them. We build products that they really need, and we build them faster than ever before. But we also need to strengthen our leadership. So that is also an explanation for the potential in profitability gain. We are still investing in business development and leadership because it's not something you do from one day to the other. And we need scale of business before you can really see it on the profit line. Going a little bit further ahead, we like to be more active on M&A in the future. We are monitoring the market. We believe that prices are more fair now than they were like 5 years ago. But we also need to make sure that what we bolt on to our company is really high quality and we get the value of it. Let's move on. Then this is a page where we try to tell the story of where we focus. So we've been talking about many times before, digital health, financial services, public aviation, and energy. We are doubling down on strengthening the leadership, but also the separation between the other sectors for our company. So I believe strongly that by separating the business of digital health and financial service even more, we can scale faster because then there is less organization to synchronize on, and small organization can grow faster than bigger one. So we are taking this gear of using the things we know work for organizational growth. On the right side, you can see how we are positioned for the AI agenda. And maybe 2, 3 quarters ago, I was a little in doubt of where AI would take us. Because back then it was, oh, if you do software, you don't have a business in the future. But right now, I see a clear path that for us to help our customers to use AI, there is a lot of work that come our way at the moment. So we can see that as also our brand is growing, then more and more larger companies and organizations want our help to guide them through the AI world and to harvest the business value from AI. It's without question that most people in the world who works in a company that they are using AI on a personal level. But we have a case story coming up that Charmaine will talk about, is where we use AI in core processes for customers. And those kind of solutions take a little while to build in the right way. And you see security regulations, user adoption, organizing data, reliable networks, cost management, contextual learning, trusted integration, scalable infrastructure. All of these things that's the craftsmanship of Trifork. That's in our DNA. And we take that responsibility for putting all these things in place. And this we see really the beginning of now. And we see a strong market for this. Let's move on. The word over to you, Charmaine.
Thank you, Jorn. So as Jorn said, that's the layer where Trifork works in. And now what I'll do is show you what it looked like within the quarter. So both segments gain differently. In products, we are growing towards half of group revenue, as we have previously stated, and the engineering capacity to do that is already in place. That is why our incremental revenue, product revenue, converts to margin. In services, agentic delivery is invoiced rather than discounted. And bundling AI services with products is where the true pricing power sits. The organization is weighted towards senior consultants with business process expertise who truly understand the client's environment. That is deliberate. And you will see the cost of it this quarter before you see the benefit. Next slide, please. We see three drivers, and all three carry into the second half of this year. Cloud operations, data sovereignty, and security. Kamstrup extended with Netic for a further 3 years in this quarter, and taking that relationship to 6 years minimum. We see increasing enterprise AI adoption, and we have two examples there that we mentioned, Swiss and Newcredit. And public sector efficiency. Here we have highlighted three key examples. These are not three separate bets. Sovereignty, AI, public modernization are the same conversation in most of our customer rooms. Next slide, please. As Jorn mentioned, we do have one case study I would like to highlight. And the point about Newcredit is the constraint. There was a hard migration deadline from the Spar-Nord merger, but we did not start from scratch. With Anne Money, whom we partnered with, we built the credit rule engine as a modular add-on to the Engage platform that Newcredit already ran on. 95% of the functionality was delivered fast, a month ahead of that deadline. Over 1,000 advisors have already been onboarded. We have satisfaction ratings at least 4 out of 5, and Corax provides the AI-assisted layer on top. So that is where the growth comes from. Christian will now take you through what it did to the numbers. Over to you, Christian.
Thank you, Charmaine. Yeah, so I'll deep dive a little bit more into the results. Jørn already mentioned the organic growth. Detail here is that what was deconsolidated in relation to 25 was the business unit Trifork Security, which roughly for the full year was 5.4 million euros in 25. So that's what you have to take into considerations, how this pan out quarter by quarter when we report this in relation to organic growth. So all organic growth, excluding hardware, the 11%. Hardware in the first half of 26 was just short of 6 million compared to a higher number in 25. Overall, for the year, 2025 showed just about 14 million in revenue, and we expect to exceed that in the second half of the year, which I will talk into a little more later. Overall, we saw quarter by quarter an increase of 1.4 percentage point in the adjusted EBITDA margin, but I will go more into details in the different segments in a minute. Overall, we're still satisfied with the operational cash conversion of 90%, and we're in a good position in relation to the balance sheet with a 1.1x in net debt to adjusted EBITDA. Looking more into the segments, we see into products and services. As I just talked about with the organic, inorganic, and hardware impact, you see an underlying 23% organic growth. As the hardware revenue is expected to end the year on top, you could say, of the 25 hardware revenue, then this is a good underlying growth. In the services business, we saw the past quarters to show at first a decline in relation to the previous years and then stabilizing, and now we are back in growth mode in relation to services. This is also a good development overall. The margins, as said, was increasing quarter by quarter. Overall, we saw this 21% increase compared to 25. What is maybe interesting here is that products now generate more than half of the group EBITDA. Here we see now that it's for the quarter, it's 53%, and last 12 months, 50% in relation to contribution to EBITDA. Even if we still see that products is less than half, 37% in the quarter and 34% LTM. The movement towards the product-based revenue for us is seen as you could say a resilience. It's a good development, and we see that to be stabilized quarter by quarter. Overall, public-private, you see here the fluctuations in the past quarters, and as Jørn talked into, then this can fluctuate, but right now we do see a good potential also in the near future in relation to development in the public sector. Looking into a little more details, we here see the margins quarter by quarter, both in products and in services, and the rolling 4 quarters EBITDA margins. Quarter by quarter, we did see in products that now we are at just about the 21% in margin, and see this overall LTM, a very good development, which we also believe will continue when the products mature, as Jørn talked into. In the services business, we came from having, you could say, declining margins, turned around in the business, and now we see improving margins in the LTM. This is also what we expect to see, that quarter by quarter margins is usually higher in the second half. This is also what we expect in the second half of 2026. I'd like to talk a little bit more into to the portfolio agreement that we published in relation to the labs business, and tell you a little more details into how that is structured and what kind of partnership that we now have with the Verdane as investment fund into our labs lab companies. What you see here is that we divided our investments into what is strategic investments and what is Labs X. Labs X is to be seen as investments where we're looking into partnering with other partners, could be more into Verdane, or could be others. Then it's also to see where we see potential exits when the company is mature and it makes sense to make an exit. Right now, here in the first agreement we made with Verdane was 4 companies. Axonic, Dawn, Premio, and XCI. The deal was structured in a way so that we did a full sale of XCI and a partial sale of the other 3 investments. but it's all done in a partnership. So meaning that the development in those companies, Trifork will still be impacted at positive developments in the companies, and I'll come into a little more details. All you see here, Q2 book value was 80 million. Out of the 80 million, 23 million was then allocated into this deal. This was a little bit above book value and satisfying in relation to this deal with the future potential upsides. What you have remaining after the deal is book value in Labs X of 44 million and strategic investments of 13 million. I here already talked into, so this is more for you to study more into the details, but is to say that we do see Verdane as a partner. We do see Verdane as a partner to enter into potentially some of the investments we already have, and also to potentially continue investments into the portfolio that we have agreed on, but also other companies. What does that mean to our balance sheet? So overall, what we see here now is that 6 month 26 is more or less net realized gain, no impact. But the impact of this deal is then set pro forma here so that you have those details. Is a 23 million impact in relation to realized gains. On the balance sheet here, you also see that Q2 26, we had this distribution with unrealized gain of 56 and invested cash of 24. Invested cash stays more or less in the same as the initial investments we did in cash in the investments that are included in portfolio, was very small. So it's the impact will be on unrealized gains that then is converted into realized gains in Q3. Once again here, you see the leverage ratio of the 1.1 I talked about in Q2 and the impact in relation to from this investment deal in Q3. Based on this, as Jørn also initially stated, we decided to propose a dividend of 3 DKK per share, which is proposed to be paid out after completion. All here, we see that the Labs proceeds are reinvested into the core Trifork. This also goes for the assets, the companies, which are not part of the deal, but where we make future exits. So this is the same strategy as we've shown before, but here reiterated into relation to what we want to do in the coming years. So what you see here is that just about 8 million from the Verdane transaction will go into organic growth, net debt management, and majority acquisitions, whereas the other half of the first 16 million received will go to dividends, as we already are buying all what we can in our current share buyback programs. This was all for me, so now we go to questions.
Thank you, Christian. I will ask everyone to please limit yourself to 2 questions and then get back in the queue. That way, hopefully everyone gets a chance to ask their questions. And to ask a question, please follow the instructions shown here on the slide. We have a raised hand from Wei Su from SEB. Wei, please go ahead.
Hi, good morning. Thank you for taking my question. I'll keep it waiting too. Firstly, looking at your cash flow, I realize there's a big capex spending in the moment due to the data center expansion. I mean, could you please give a bit of guidance on what type of capacity do you have, or how much will you expand? And I recall that based on our previous dialogue, I understand a lot of those data hosting capacity is funded by your customers. But now we see a big spending by yourself. So what is my misunderstanding here? Should we expect more sort of refund from your customers, or Why now is you still need to invest massively in the data center? And I'll do next question later.
Yeah, thank you very much, Wei. And it's
Christian, maybe I can start answering, and you come with the financial effects. So thank you for the question. So first of all, you should not see Trifork as a speculative investor in data centers. So this is nothing changed there. We only build data centers, which we do at an increasing rate, if they are backed by current or future customer payments under contract. Okay, so that's like the overall thing that we have said all the time, and I don't think you have misunderstood. So maybe then Christian can talk to your detail in the question.
yes, but that is totally correct. And what is maybe special here in the first half reporting is that we have one agreement where it's in between, you could say. So it's in between going into the operational lease, which is directly connected to a new contract. So in the just at the core, it stays as you could say CapEx in our accounting, but this is then moved away in July. But it's just in between here, in between quarters. So the strategy is still the same. And as Jørgen said, it's always tied directly into concrete agreements where we have back to back with the customer on the agreements so that we put this into, you could say, the operational hosting and leasing. So overall, for investment like this, we only keep, you could say, CapEx of just about 20% in the current financing model we have.
Okay, and is it a data contract you mentioned? Is it something already announced, or is something that you will be announcing?
No, the current one is something that is already announced and is delivered in the second quarter, at least a certain sum of that. So that's, you could say, also the reason for the increase in hardware-based revenue in Q2. You could say there will come more in Q3 and 4. The exact timing of that, I cannot tell you exactly, but it is, you could say, conditional of hardware delivery, etc. But it will be in Q3 or Q4.
Okay, thank you. You're very, very clear. And then second question here on the service margin. It seems quite confident about improvement. And you mentioned the cost control, pricing, bundling, AI. I mean, what confidence do you have in your pricing power? I mean, I'm a bit curious to know, because now I mean, the major concern here with the AI is discounting. Well, you're talking about a pricing increase, if I understand correctly. Can you elaborate here?
Yes. So imagine that 5 years ago, when we engaged with a customer, we would do time and material development, and that means different rates for testers, for designers, for architects. So it's a broad rate card going from for us quite low to quite high. What we see now is that the people we are bringing on board now is the people who can guide the customer, and where we then can deploy our products and make sure that they get their data aligned across the whole organization. So as I mentioned before, that today people take individual gain from AI, but we want to help our customers take organizational value from AI. But that requires a lot of work with organizing the data, the infrastructure, but also how you then build the models on top of your data, etc. And those are, you can say, more senior consultants.
Perhaps if I can also add just one thing on that. What we increasingly see, clients are not looking just to buy hours, what they're looking to buy is an outcome, particularly if it's in a regulated environment where somebody essentially carries that risk. So where we would get some pushback on would be just classic fixed price work. And that's the work we're more selective about. But where we particularly specialize is being able to deliver a successful outcome. So I think that is part of why you're seeing the confidence we see and the numbers that you do.
Okay, that was clear. Thank you. All right, jump back to the queue.
Thank you, Wei. We are waiting for the next questions in the queue. Mads Kvistgaard from DNB Carnegie. Mads, please go ahead. Mads, we cannot hear you yet. Make sure that you are unmuted. Okay, I think while Mads might fix his
Can you hear me now?
microphone. Yeah, okay, Mads, we can hear you now. Please go ahead.
Technical problems. Thank you for the detailed description on how you use AI and also the higher need for domain knowledge internally. I was just thinking if you can elaborate on how you think about the underlying LLM economics in Trifork. In particular, how exposed is this company to token prices as AI uses skills? And are you also primarily relying on third-party models such as OpenAI, Anthropic, and the likes? Are you building and fine-tuning your own models? And ultimately, who bears the inference cost? Is it Trifork or is it the customer? Thank you.
Okay, now that's a lot of stuff you're touching there. Let me start with answering. When the most power we see in AI is that, as Charmaine touched on, we are now able to build a specific solution to a group of customers. You can see upfront and with cap risk before we sell it. And this would be impossible 5 years ago. So that's the huge benefit that you can now build so fast. It doesn't take away the implementation work and implementing the solution at the customer, but it takes away the risk of how much it would take to build it. And so before, the customers would hire us, and then we would build it on time and material in a one contract based on a framework agreement and then hours. They still sometimes want to do that, but if we can show quick enough that they already can see this solution, they would of course rather have that because it's also less risk for them. Okay, then if we have time and material engagement, so what we have been trying to hinting in this presentation, 90% of all our customers now allow us to use AI. That was not the case 6 months ago. A number of our customers were so unsure about the license terms of, you can say, Claude or Microsoft or whatever big language model for generating code, that they simply said, okay, it's better you not use it. But now 90% says you can use it. Okay. Bear in mind that those contracts have been signed maybe 1 or 2 or 3 years ago. And they are basically only about time and not material. So it's still early days for us to pass on the token cost in those engagements to the customer. However, all of our customers are very positive that this is the trend. And this is also what we hear from our colleagues, that when and if you work on time and materials, it will be time as in people and material as in agents or AI tokens. So that's the near future, but not yet 100% realized. Does that make sense?
It does. It does. Thank you.
But also, the token cost for Trifork is not a huge burden. So it's you cannot put that back to, oh, your profitability could be better. Yes, it could be better, but not a lot better because of tokens. It's not a huge burden for us. We see that it's increasing. As it increases, we either want to sell our customers products or build the tokens to our customers. Taking into you also, because you asked many things, you also asked about, are we using the big models, the foundation models? Yes, we do use foundation models. Are we also using local models and tailor-made models and pre-trained models? Yes, we do. And we are working with more and more partners locally in Europe to use local models, because if you can have a tuned model for a specific business process, you save a lot of money and a lot of tokens. So that's another reason for customers to work with us, because we can save them token cost, because we can be smart about how we deploy AI and which model to choose. So it's both things. We use the big foundation models, and we use thousands of tailor-made models. And we use Edge AI as well. So you're touching on something big here.
Perfect. Thank you, Jan. Thank you for the detailed explanation here. Makes sense. Then maybe just a bookkeeping question, but just to understand the situation in the US. Some quarters now with the negative growth. 2 years ago, this was the brighting star in the company. I know it's different today, but maybe just enlightening us on how we should think about the US for the coming quarters.
Yes. So North America, which includes US and Canada, we have seen over the past couple of quarters a shift from business potential and pipeline from US to Canada. And we also changed leadership. Our new CEO of North America is Canadian living in Canada. And we see especially digital health being a big potential for us in Canada. That's not to say that we are not working with US customers today and that we will also in the futures. We will. We know that this change of management and change a little bit of the focus have costed on the bottom line and on the growth, but we will be back on track.
And maybe just one additional comment is that the team around spatial, we established in the US and led by the US team. And initially that was all American revenue. But now actually spatial interest for spatial engagements are also increasing in Europe, meaning that some of the revenue that previously was only directed towards US now is actually directed towards Europe. So when you look into, you could say, how our organization works and how you see it on the revenue in the different regions, then it's not always that it means the decline if revenue drops in one region, but maybe it's just moved to another one. So it is because we do deliver global from our teams. So that's also, you could say, some of the explanation.
Makes sense. Thank you so much.
Thank you, Mads. Let's see if there's any other questions. There's no other questions, but from other people, but Mads is raising his hand. So Mads, please go ahead.
Thank you. Just one more question from my side. Now we have a very strong cash position, at least in Q3. Can you just remind us on the potential M&A targets? I know you also have a range in terms of employees and also on revenues, but I guess, you need probably to do even more work today when you do acquisitions in the world with AI and so on. So is it fair to assume that you will be looking more in the high end of your target ranges in terms of size, people, and revenues? Thank you.
The first comment I want to make is that yes, we are looking at some potential M&As, but you can also appreciate that the peers from our peers are not doing equally well. So is the case with all the smaller the smaller companies that normally will be our target group for M&A. So we are very careful what we bring in, because in all humbleness, I think we have been handling the disruption of the past few years pretty well, whereas others haven't been so lucky. And so we do not want to invest into something that is a falling knife. And it's not easy to handle all these disruptions. And I don't see like a lot of potential M&As out there. I think we will, for the better part, we will have to figure this out ourselves with organic growth. And when something then happens, then yes, we will also do M&A. But I think the risk has increased for M&A.
Makes sense. Thank you, Jan.
Thank you, Mads. We are waiting for any other questions. Please raise your hand. There seems to be no further questions at this time, so I believe we can close this session. Thank you so much for your interest in Trifork. If you want to interact with our CFO, Christian, in Danish, there will be an opportunity to do so at 1:00 today via HC Andersen Capital's webcast, which you can find on our in our company announcement this morning. Thank you so much, and have a good day.
Thank you.